All right, so we had another pretty crazy week in the markets. The main thing from this past week was Bitcoin hitting a new all-time high. It has since corrected a little bit since then. At the time of me making this video, it's actually only up slightly on the week, but we are still within striking distance of an all-time high. First things first, if you get value out of the video, please like and subscribe. Check out those links below. Always appreciate the support. So, like I said, getting right into it, Bitcoin hitting an all-time high, and this is really good news. For obvious reasons, but I think that the most important thing, or one of the most important things here too, is that this is one of the most, unappreciated, untalked about all-time highs probably ever. And again, anecdotally, I know probably, 10 or 15 people that either own Bitcoin or know that I own Bitcoin, or at the very least are interested in something along those lines. Not one of them has brought it up in the last 6 months or so. And there was probably, 3 or 4 of them, maybe even 5 of them that brought it up back in like 2021, 2022. And I also bring that up because I've heard this from a handful of other people, some even larger YouTubers, or at least moderately large YouTubers, and they're pretty much all saying the same thing, right? So this is important because this means that we have hit this all-time high with very little, retail adoption. In fact, retail is actually selling Bitcoin. They're actually net sellers recently. So when we've hit a new all-time high, when retail has actually been net sellers recently, eventually that trend will flip. And when that flips, I think that's when we see the massive adoption. And we're still very early on. We're the fourth halving of 30 or 40 halvings, whatever the number is, and we've already gone this far. So I still think we have a long ways to go. Obviously, it's less than what I think a lot of people thought. A lot of people thought we'd be like 200,000-300,000 by now, and I thought that too. I'm not going to lie, but I still think that the trend is in the right direction. Right? It's still in the right direction, and I mean, go back 6 months, go back a year. Look at how well it's done. It's still done very well over those periods of time. And the one thing about Bitcoin is that it can be very frustrating over short periods of time. But when we're talking about years, when we're talking about decades, it's going to outperform, and it's probably going to do it by quite a bit. The next thing here is another very interesting point here. On March 2nd, 2017, the price of Bitcoin exceeded 1 ounce of gold for the first time. Today, which is last week, the price of Bitcoin exceeds the price of 1 kilo of gold. So 1 kilo is roughly 35 ounces. So in other words, Bitcoin has outperformed gold by 35-fold, 35x over the last 8 years roughly. And I mean, gold's actually done not too bad over that, especially mainly after its recent run up over the last year or so. But Bitcoin's easily outperformed. So again, this is just, is it going to outperform 35x over the next 8 years? I kind of doubt it. That's some pretty crazy returns, but I still think it's going to outperform. And I think it's going to do it fairly easily, like I've said. The next thing here is median U.S. home price in Bitcoin. And I've talked about this before, but I mean, it just reached another new low or new high, depending on how you want to look at it. And again, back 2012, it was 50,616 Bitcoin for a house. 3 years later, 901. Right, so the price of housing in Bitcoin went down 50-fold in that, more than 50-fold in that time. Over the next 3 years, down to 24 Bitcoin. Over the next 3 years, it actually went up a little bit. No, sorry. The next 3 years, we were down to 10 Bitcoin, so roughly in half. The next 3 years, down to 5, so again, roughly in half again. So even the price of housing in Bitcoin is going down. That would be roughly 25% per year priced in Bitcoin. Going down 25% per year priced in Bitcoin. I don't think that's over the next decade or two, it's probably not going to happen, but I still think the number's consistently going to go down. I think the average house priced in Bitcoin, I think, will probably cut in half maybe not every 3 years, but every 5-6 years. I think that's more than likely. I mean, for all we know, we hit 253,400,000 within the next year or two, and I mean, the average home price in the U.S. is like 350, 400, I think. So we could see that. Like, it would if the price of Bitcoin was 300,000 or 400,000 a year from now. Like that's not surprising anyone. Like that's not. I mean, people that aren't in the space maybe, but anyone that's in the space, that's not surprising you even at all. So. Let's get into the stock market from this past week. We did have some earnings, but as far as the stock market this week, I think it was later last week we had the credit rating downgrade scare, and something that I seen that Adam Koo pointed out is where I seen it at least. The last 2 times that the U.S. debt has been downgraded, that marked bottoms in the market. Actually, almost perfect timing too. The one of them was in 2009, I believe. The other one was it was 2013 or 2018. I don't remember. One of those two. And those marked almost perfect bottoms in the market. Now, again, obviously, past doesn't predict the future guaranteed, but usually this kind of stuff gets priced in right away, and the market moves on. Right? The market moves on. The other reason, I mean, getting into stocks like directly, S&P was down about 2.5%. Nasdaq was down about 2.5%. The equal weight S&P was actually down more. Mid caps was down about 3.5%. I think small caps were down about 4%. The one shining light this week was international stocks were actually up a little bit. So I think that there clearly is a transition towards international stocks, and I think that's mainly, I think, and I think the data is pretty clear on this. I don't even know if this is an opinion thing, that a lot of the Europeans, Asians, people outside of America are, they're just buying more stocks from their home country, or at the very least, if you're from the UK, you buy European stocks. If you're from Japan, you buy Asian stocks or Japanese stocks. Like you're Canadian, you buy Canadian stocks. Like, I think that's pretty much what's happening. Now, I don't think that U.S. dominance is going, at least as far as the stock market goes. Like, if I had a gun to my head and I said, hey, is the Nasdaq or the S&P going to be outperformed by any major foreign index over the next decade or two, I would say no. But I think that, you look at the Nasdaq and the S&P have destroyed a lot of these indexes over the last decade or two, and I think those numbers are gonna come together. They're not going to be that much different, because and the reason for that is mainly what Trump is doing with tariffs. Now, regardless of what you think of it, I clearly understand both sides of the debate here. I think both sides make some legitimate points, but in a lot of ways, it is angering foreign countries and foreign leaders, and that's probably not going to change. So that's something to keep in mind. But the chance of a recession has actually gone down over the last month. I think it's around 30 to 40%. It was at 65 about a month ago. So obviously, the market is predicting, it's less likely than likely for a recession, but they're also pricing in less and less of a chance of a rate cut. And I believe there's only 3 meetings left this year, and it's less likely than likely that they cut the next time. So I think that we may only get 1 cut, and we might even not even get a cut this year for all we know. Nobody really knows. The one thing that's for certain is nobody knows what's going to happen, right? My prediction is simply dollar cost average, some indexes, and dollar cost average stocks that you think are good companies and are trading at a good price. I think trying to time the market has been proven time and time again that it's not possible. People can do it every now and then, but you can't do it consistently. So there was some earnings from this past week, so let's get into that, and then I'll leave it at that. Home Depot, they beat revenue. They did miss earnings. Although if you look at the stock was down quite a bit. I think that was mainly due to the stock market as a whole being down this week. Palo Alto Networks is a stock that I really like. This is a stock that I really like. It's just too expensive. I've been following it for probably a couple years, and it's debatable whether it's ever gotten cheap enough to buy. It was down quite a bit on its earnings news. However, it did beat earnings and revenue. So, although I think that might have been, again, like a market kind of thing, just selling off with the market, but it definitely did sell off on earnings news. And a lot of companies, another thing you have to keep in mind too with companies is that when they have these big pullbacks, is it because there's something fundamentally wrong with the company, or is it because the market is just going through a lot of volatility or turmoil, right? And you look at like a United Health or some of these other like drug makers. I think that it's legitimate that those companies are down because there's questions with the company. But you look at companies like this, I don't think they're down necessarily because they're a bad company or there's anything wrong with them. I think they're too expensive, but I think they're still a really good company. Toll Brothers beat earnings and revenue. I do follow them. I have owned them in the past, although I think it's pretty hard to own the home builders in a higher rates environment. I think that the only reason you would want to buy a home builder is that we're going into an environment where rates are going down. Mainly, number one, because a lot of people are locked into these, sub 3%, 30-year mortgages. Like, it's pretty hard to buy a new house when your mortgage is going to be 7%. Like, you got to be doing really good to be able to afford that upgrade, right? So, I think that until rates go down, I think that the home builders probably will struggle. But again, I could be wrong there. Target's released pretty bad earnings. They missed earnings and revenue. They were down on the week, although not that significantly. I don't think I ever would buy them, but I do follow them nonetheless. Lowe's, they beat earnings and revenue, and I believe they were down on the week. Yeah, they were down quite significantly on the week as well. I don't know if I ever would own them, but I do watch them because a lot of Lowe's and Home Depot and stuff are decent barometers on how the economy is doing. Analog Devices, this is another one I've owned in the past. I don't know if I would buy it again just because I think there's better options, but I think they are a decent company still. They beat earnings and revenue. Another one here is BJ. BJ's Wholesale. This is kind of a competitor to Costco. And I mean, I think Costco's better. They're trading at a much more reasonable price, but I think Costco's better. They did beat earnings. They missed revenue. And then the last one here is going to be TD, Toronto Dominion Bank, or TD Bank, depending on how you look at it. They beat earnings and they were up quite significantly on that news. I think these are decent companies, but the problem with the big Canadian banks is that the Canadian housing market is definitely one of the more frothy ones out there. And if it ever did have issues, the big banks would get hit really hard. And that's why I don't own them, even though I think they're really steady. Like they pay very consistent dividends. They grow decently as well. I mean, I believe TD's outperformed the S&P over the last. Actually, no, it hasn't over the last decade. But I mean, over the really long term, it's basically kept track. Maybe there has been periods of outperformance. So I think they're a decent company, but I just think there's better options. So anyway, that's what I wanted to bring up today. If you liked the video, please like, subscribe, comments, check out those links below, and stay tuned for more.